Hello everyone, it's noon on Monday, March 11th, 2024, and let's briefly discuss the Uhui market for this week. Last week, overall, we continued to incur losses. We lost around $10,000 USD last week. The situation last week was such that if we guessed correctly but didn't buy, or if we bought but guessed incorrectly, we didn't make money. However, I wouldn't necessarily say we guessed wrong either. First, let's take a look at the market. In terms of sales, the US dollar index has mostly been trending downwards. After breaking below the 4-hour position, there was basically no turning back. As for gold, it was quite strong. It opened on Monday and continued to rise, but I missed the opportunity to buy. Personally, I find it challenging to buy into trends that rise or fall in a single direction. For short-term trades, there may still be opportunities to chase, but for swing trades like mine, there were no buying or selling points today. As for crude oil, there were some buying points, but despite reaching those levels, it didn't rise. Last week, I expected all 4 commodities to rise, and 3 of them did: gold, euro, and pound. But crude oil didn't. So, I entered crude oil positions at certain points, but they didn't yield significant profits. So last week's situation was such that we guessed correctly but couldn't buy in, or we bought in but didn't make money. It's quite frustrating, but by controlling the rhythm and adjusting our pace, we can turn things around quickly once we find the right timing. Overall, the current losses are still manageable. Let's take a look at the US dollar index for this week. Firstly, let's open up the chart and remove the annotations from last week. I've noticed that every time I see losses initially, I end up making profits later on. It's been like this for the past few years. Now, regarding the US dollar index, from a fundamental perspective, it seems to be heading downwards. This downward movement is quite apparent from the overall perspective. Looking at the weekly chart, you can see where it's been bouncing off. Even when the dollar was consolidating in this area in previous weeks, we mentioned that there was a high probability of it weakening and heading downwards. As expected, the dollar fell last week. Currently, we're observing the dollar's downward movement, and we need to focus on the lower levels from previous periods. These levels are likely to be broken, but it might not happen this week or even the next. Dollar depreciation isn't typically a one-way movement. It tends to oscillate downwards slowly. So if we're considering entering short positions this week, we should look for opportunities to short the rebound, particularly around the key support points from last week. The dollar's decline might find some support at these levels, as indicated by last week's candlestick pattern. However, we can't rule out the possibility of consolidation or even weak rebounds in the coming days, especially considering the significant data releases scheduled for this week. Therefore, looking at the daily and weekly charts, it seems reasonable to expect a short-term rebound in the dollar this week, followed by further declines. The range for this oscillation could be around 103.5 to 103.6 on the upside and 102 on the downside, with a range of about 160 points. Now, let's take a look at gold. Gold is the focus for this week because, from a daily chart perspective, it has been rising consistently for quite some time. The recent ascent has been rapid, almost vertical, indicating a strong upward trend. However, despite this bullish momentum, I personally don't dare to say that gold has reached its peak. But I do believe that there's a short-term need for a correction. Therefore, this week, we can expect significant volatility in the gold market. It's unlikely that gold will continue to rise unilaterally like last week. Instead, we anticipate increased volatility and potential consolidation. Therefore, our focus this week should be on observing gold's movements within this channel and considering short positions. We should look for opportunities to short gold on rebounds from key support levels. For short-term traders, gold's correction is necessary and desirable. We need to be patient and wait for opportunities to enter short positions. When looking at the 4-hour chart, we can see that gold isn't particularly weak at the moment. Although it's not consistently making new highs, it still requires careful observation. To determine when to enter short positions, we should watch for signs of weakness and consolidation, particularly on the daily and 4-hour charts. Look for significant bearish candlestick patterns and consider shorting when gold is oscillating within a range. Set stop losses just above recent highs. So, the key focus for this week is gold. We should be looking to short gold and be cautious about chasing long positions at these levels. If you're already in long positions, be patient and hold on to them. Don't chase the market higher. Instead, wait for opportunities to short on rebounds. Regarding gold's longer-term prospects, while it's difficult to predict, given the current market sentiment and external factors, it's reasonable to expect further upward movement after a correction. However, we must be mindful of the need for gold to consolidate and potentially retrace before resuming its upward trend. Overall, the emphasis this week is on observing gold's behavior, particularly around key support levels. If these levels hold, we can consider adding to long positions. However, if they are breached, it may be prudent to cut losses and reassess the market sentiment. Now let's discuss the euro. Looking at the euro's current position, we need to refer to the main chart. Over the past few weeks, the euro has been showing a pattern of upward movement followed by consolidation, then another upward movement. Based on this, it seems that the euro is currently in a phase of upward momentum. This upward momentum sets the tone for the overall trend. For those looking to trade the euro, the strategy would be to buy on dips, particularly at key consolidation levels. This type of trend in the euro, along with other non-dollar currencies, has already established a long-term bullish trend. If you have the patience and willingness to hold positions, there shouldn't be any problem in going long on non-dollar currencies in the long term. Similarly, let's consider the British pound. Like the euro, the pound has experienced a significant upward movement recently. However, if there wasn't an entry made at that time, it's not productive to dwell on the missed opportunity. It could be due to various reasons, but dwelling on them won't change the situation. Instead, we should focus on the current market conditions and opportunities. Looking at the monthly and weekly charts for the pound, we can see that there has been a shift in momentum. Previously, the pound was characterized by small bullish and bearish movements. However, now there's a clear upward trend, indicating a potentially broader and more significant movement in the future. For the pound, resistance is seen around the 1.31 level, and a correction is likely to occur around this level. If there's an opportunity this week for the pound to retrace, particularly towards the 1.272 level, it would be worth considering entering long positions. Overall, the strategy for this week remains consistent with the previous week's approach. The dollar index is expected to continue its downward trend, while gold remains the focus for potential short positions. Additionally, buying on dips for the euro and the pound seems to be a viable strategy given their upward momentum. Let's talk about the Japanese yen. The yen has been declining rapidly due to a change in policy by the Bank of Japan. This week, on Friday, March 15th, there is a crucial meeting in Japan that will likely have a significant impact on the yen. We need to await the outcome of this meeting, as it could completely reverse the direction of the yen. Looking at the current position of the yen, its general direction has already been determined. Therefore, the focus should be on this area. In summary, over the past couple of weeks, trading performance has been relatively poor. The main reason for this is that I misjudged the rhythm of the gold market in the first wave, and the results in the second wave, particularly in oil trading, were not as expected due to consolidation. This led to emotional distress and a significant loss in the account balance, around $10,000 to $20,000. It's important to maintain a calm and stable mindset regardless of market fluctuations. Even if the market moves significantly, maintaining emotional stability is crucial. In the past 2 weeks, I have realized the importance of this. Moving forward, I need to adjust my approach and focus on capturing one profitable wave at a time. If I can successfully do that, I believe there will be significant opportunities in the future. As we begin a new week, I wish everyone successful and profitable trading. Regardless of last week's performance, let's approach this week with renewed determination and positivity. Let's continue to work hard together.